How are you actually pricing your mailers? You pull out a huge, you've got your list of 50,000 records queued up here. What tools are you using? How do you dig into that? Is that actually you that's doing the work, or is that somebody on your team? Just walk us through that.
Yeah, for me, so I've got someone on my team that actually puts the list together. I've got someone that pulls the list. We use, Data Tree for a lot of our data. We got an ongoing contract with them. But so we pull tons and tons of the data, and then we scrub it, for certain stuff and everything, all the standard stuff that people take out of these lists. And then as far as the pricing goes, I've done priced, and I just did that again this last mailer. And I've also done the other side where it's just countywide pricing. And when it's the countywide pricing, it's just me that goes in there, and I'll kind of say we're mailing like 20 counties that mailing. I'll just go county by county. And most of the time I'm on Zillow, and I'm just looking at the comps and trying to get a feel for here's the retail price per acre. And then I back off at the percentage from there. And I've got someone on my team that actually on the spreadsheet, I'll just say for this county, price it at this amount. This county price at this amount, and then they'll go in and build the spreadsheet for me and stuff. So I'm not actually doing that part anymore, but then I send it off to the mailing house. And then some of the areas I'm doing with priced, especially the areas I don't know as well, or maybe there are areas where there's a lot of variation from one part of the county to another. And I probably should spend more time on the pricing to get it more dialed in. And I'm definitely not the be all end all person on that stuff, but I just figure a lot of times it's kind of a start of the conversation. It's kind of rare to kind of hit the nail on the head with the pricing unless, I don't know, all the stars align. A lot of times it's someone will come back and show some interest in the letter we sent, but it doesn't end up being that price that was on the letter. It could be less. It could be, maybe we overshot it. Could be more, maybe they're calling in to say, hey, I want to sell, but here's what it would take. So we're always, when we're looking at the property when it comes in and trying to decide, okay, what actually could we do on this after we had a real chance to really look into it.
Do you ever do any follow-up with these people? Or is it kind of just one and done and you move on?
After they're a lead, or you mean just waiting on their
sorry,
list?
I'll clarify that a bit. So if you send out a mail campaign, a person just simply doesn't respond.
Yeah.
Do you send them anything else? Or are you sort of just done?
Yeah, normally, if it's in an area I like, an area where we're starting to pick up good momentum and doing a lot of business, I'll resend it every 3 months. So they're probably sick of hearing from me, but...
When you were doing houses, did you ever deal with direct mail at all?
Most of when we were doing the house flipping, when we were buying them for ourselves, I was just getting all of our deals off of the MLS. And that's why I got my broker's license, because I was like, well, I can get access to these deals as soon as they hit, and I can go show it to myself, save a little commission when I write the offer and that type of thing. After I got my broker's license and I was kind of doing that side of things, I was doing direct mail to get some listings, especially for a while their short sales were really big. So I was sending out a lot of marketing about short sales, and I can list their short sale property and handle that process for them. But so I did have experience with direct mail, but not like this. I mean, it was more of smaller list size, but I was trying to go big at the time. But these were all not letters that I actually sent myself, but I hired someone on my team that could handwrite the letters and send out something like that, put an actual stamp on it, but not letters like this though.
Going kind of just back to very square one of getting a list. So when you get your list from Data Tree, how are you filtering that thing? Is it just super minimal, just like this county and state, vacant land, go? Or are you saying certain sizes? Or I don't know, I'm just trying to get to the bottom of how much time or how particular are you about who ends up on that list in the first place, given that you're not getting lost in the weeds after that step?
Main criteria that we take out is so I'll set a certain county, and then I'll set the acreage range. Most of these counties now that we're doing is 10 acres plus. So we'll do 10 acres plus, that certain county, vacant land. I'll have certain things like assessed value under 10,000 or something like that. I think I'll scrub those out. I guess it depends on the county, because sometimes there's a good correlation between, the assessed value and actually what the property is worth. And sometimes there's less of a correlation, but most of the times we scrub out those really low assessed values. From there, we pull the list, and then it's a manual, scrubbing out the stuff like the railroad company or the city or the county, and, all those standard ones that you scrub out. We probably don't do enough there. I always hate to scrub out too much from the list, because I'm worried that those are the good ones, that maybe other investors scrub out, and I'll send them a letter and and they'll respond to me. I don't know.
Do you have any concrete examples of that where you got a really good deal from something that you were surprised by? Other people would have gotten rid of this. Anything come to mind? Or
nothing off the top of my head. No, I mean, there's been really good deals that I kind of wonder why didn't another investor end up with this before me? But I think a lot of it comes down to timing sometimes. So like my letter was there at the right time, or maybe they saw 3 other letters from me that same year. You know, the thing that we always try to impress is like we actually do what we say we're going to do. We're, you know, if we agree to a contract, unless there's some sort of giant red flag that comes up during the due diligence process, we're moving forward. We're actually buying this. I'm not going to screw around and try to renegotiate with you when we get to the finish line or something like that, or assign it to another investor. Like we are actually buying them, and we try to make it as simple as possible on them.
I know earlier on you kind of talked about some of the like mistakes and mishaps you made on those first few deals. Do you ever make mistakes now? Or are you just mistake free? Like, well, I'm curious, somebody who has done this for a while and is making as much as you are, what kind of mistakes do you still fall prey to?
Unfortunately, I do still make mistakes. I try to make less of them than before, but I think maybe sometimes being overly optimistic, I run into that sometimes because I'm an optimist by nature. So maybe on some properties, I kind of estimate a higher potential profit than we actually end up receiving at the end of the day. So that's probably the main one I make. And sometimes overlooking an issue, potential issue that is a bigger deal than what I assumed it was. You know, like for instance, this recent property that we just sold in December, it was property we had in our inventory for a long time, 9 months. And our average hold time last year at the end of the year, it ended up being 70 something days. So a little over 2 months is the average hold time. You know, it was a 9 point something acre property in a nice rural area, kind of pretty. It was sloped, but not too sloped. The main thing about it was had road frontage, but the road frontage, it was like rocks all along the road. And there was no, like big rocks, you know, bedrock type stuff sticking out of and so there's no way to get a driveway in there. And I was like, well, this could be a recreational property or whatever. And we ended up selling it for way cheaper than I thought it would. Just kept reducing the price over time. And the feedback that I just kept getting was like, they want to know how they're going to put a driveway in and actually access their property. So it ended up selling. I made a little tiny bit of money, a couple $1,000s. It was one of those, an issue like that, which I should have factored in more than I actually did. So those types of things, I'm learning over time, you know, to really understand those things and maybe pay them more attention if something's staring me in the face like that. I mean, I just try to now more and more, I try to put myself in the buyer's shoes. Like if I were walking out to this property and looking at it, like what, you know, is it a good property? Would I want to buy it? Where I would see this flaw and be like, no, it's just a deal breaker. I'm not going to buy this property because of that. Try to buy properties that I consider good properties now. So I stay away from those crappy ones, even if they're really cheap.